What's going on, guys? Limelight Capital here. How's it going? Back for another video. Alright, it's Sunday night, so I wasn't really going to put anything out. I was kind of tired and stuff. Had a long day. But, I was just taking a look at the charts, like I've pretty much been doing obsessively, for the last few weeks. So, I just figured I'd just put some quick info out for you guys, just talk about this. Again, this is not financial advice, guys. I'm not a financial advisor. I'm just another ape just trying to do some due diligence and analysis for you guys. So, first off, let me just move the camera over here. All right, so first off here, we are going to look at this. So I'm looking at this on WEBULL. This is the monthly GameStop chart here. So actually, let me pull this out a little bit more. Okay, so we're looking at, this is from about now, which is here, up until about the beginning of February. I'm just trying to display this cup and handle pattern. I'm sure a lot of you guys have heard this here, but, I'm not the best artist, but I will try to draw this little cup and handle for you guys here. So if we can see this, it's not a perfect cup and handle, but if we look at this here, this is very close to being a perfect cup and handle, So, I mean, look, that's a teacup. All right, so we're going to go over here to Investopedia. Bear with me, guys, sorry. All right. So here, we're on Investopedia.com, and we have the definition for a cup and handle. So it says, what is a cup and handle? A cup and handle price pattern on a securities price chart is a technical indicator that resembles a cup with a handle, where the cup is in the shape of a U and the handle has a slight downward drift. Okay, so going off of what they just said there, I'm pretty sure this qualifies. So he would said it's a cup with a U shape, again, U shape here, and then we have the handle that goes in a downward motion. So traditionally with cup and handles, they're very bullish. So what they predict normally is, usually there's the U shape for the cup, right? And I'm just drawing the top in here just for the shape. Obviously, it doesn't mean anything. So then we have this here, which is the handle, which is like the last week or so. And normally in cup and handle patterns, normally after the there's a couple scenarios after cup and handles. Sometimes you'll see like a nice correction. You see the correction here for the handle, and then you see it spike up, and then usually maybe you'll see another spike down, but then you see a huge jump. Or you can just see just a straight up, or I've seen, straight up just moonshots after that. You know what I mean? So cup and handles are very bullish patterns here. The cup and handle is considered a bullish signal, like I just said. With the right hand side of the pattern typically experiencing lower trading volume. Okay, so that's a key phrase right there. Typically experiencing lower trading volume. So if we go back to the charts here, let's take a quick look at this. All right, let's just go back here. All right, so if you look at this here, if we look at this bottom chart, we can see right here the steady decline of volume. This is the volume chart right here. This is the volume chart, okay? So if we look at this, there's been a steady decline of volume under here for March. If you look at it, and if we circle right here, the volume is basically minimal. That's another key factor in cup and handle patterns. You need low volume, okay? The pattern's formation may be as short as 7 weeks or as long as 65 weeks. Okay, so we look at this. So I'm just going to zoom out here just so we can see the timeline here. So it looks like it started, let me see here. It's looking like it started right at the end of January, okay? So if we go from from the end of January all the way through February, that's 4 weeks. And then we're almost all the way done through March. So look, again, the pattern's formation could be as short as 7 weeks, okay? So if we look at this, obviously we're not at 7 weeks, we're about there, but I mean, look, it's all just roundabout numbers. Okay, so Let's see here. Does a cup and handle? What does a cup and handle tell you? American technician William O'Neill defined the cup and handle pattern in 1988. Classic How to Make Money in Stocks, adding technical requirements through a series of articles. O'Neill included time frame measurements for each component. Da 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 da. All right, so I'm just gonna go up here and just read this quick TLDR here for you guys because I don't want to bore anyone. A cup and handle pattern is a technical chart pattern that resembles a cup and handle where the cup is the shape of a U and the handle has a slight downward drift. A cup and handle is considered a bullish signal extending an uptrend and is used to spot opportunities to go long. Technical traders using this indicator should place a stop buy order slightly above the trend line of the pattern. All right, so we're going to back out of that here. Pardon me. Alright, sorry about that, guys. Just want to put my hat backwards here. Let's get it out of my face. Alright, so real quick, I'm just going to go through this real fast here. This is another D&D from Reddit. Okay, so this guy says, he starts off by talking about shorts. I'm just going to skim through this. I'm not going to read it word for word. So he starts talking about shorts. So he has a report from iBorrowDesk there, which this is just a screenshot. It's not linked. So, but it just shows the amount of shorts that are left to be shorted from iBorrowDesk for GameStop. So he says, we are currently in the complete market disconnect when dealing with GameStop short shares. In this graph, you will see a correlation between the red fee line and the blue bars showing available. Obviously, I'm not going to pull up the charts and everything. As the bars get smaller, the lines get higher. So basically what he showed was the correlation between the price of to buy the short, like the fee, and the amount of shorts. So he noticed that they were correlating. He said, as the bars get smaller, the line gets higher. As the shares get harder to borrow, the fee increases. Simple business acumen. But why isn't it actually doing that the last few weeks? I monitor the shorts on various platforms constantly, and on Friday we saw available to borrow shares on IBD fluctuate in the hundreds for the first time since we pulled back to $40. Let me say again, between 2 p.m. and 4 p.m. on Friday, March 19th, there was less than 1,000 shares available to borrow on short. I saw that too on iBorrowDesk. There was I think 700 left at the end of the day on Friday. So they really are using all their ammo. So he goes on to say, maximum shares to borrow has not increased on iBorrowDesk since March 17th. On March 17th, there was a total available share count of 600,000. Normally, as shares get lent out, the numbers gradually replenish themselves as shares are covered and new shares are located to borrow. Okay, so what he's saying here is, for example, on March 15th, the day began with 250,000 shorts available. It dropped to 100,000 at 12:45 in the afternoon before being replenished at 1:30 back up to 250. They ended the day with 150 available. The next day on 3/16, they had replenished to 400,000. So he's basically, the point he's trying to start making here is that before you could track when the hedge funds were buying shorts and then paying them back. So I guess what the point he's leading into here is the fact that recently the shorts have been just buying shorts and not paying them back. So he goes on to say, well, 10 a.m. on March 17th was the last time any shares have been replenished on iBorrowDesk. The available to borrow share count has only gone down since that time, and there has been zero meaningful replenishment. Zero. That's crazy. They couldn't even find 1,000 actual shares to borrow on Friday. Like I said, it was only 700 around about. But if shares are so hard to locate right now, why hasn't the borrow fee increased? Very interesting. That isn't even a rhetorical question. I'm legit asking out there, because he doesn't know, and I agree. I mean, the fee should go up if there's no shares. The more popular a share is to short, the fee should be going up. Who thinks it is a good bet? Who lends such a highly volatile stock as GameStop with no shares available to locate at 0.5%? Agreed. I mean, that's just a waste of money for the lenders. Someone is purposefully trying to make shorting GameStop a cheap bet, and I think someone just wants to watch the world burn, and they are selling gasoline at 0.5%. And how does iBorrowDesk only show borrowable shares in the thousands, but Fintel shows the daily short numbers? Yeah, so basically the numbers on iBorrowDesk and other websites to track the amount of shorts, they've been, inaccurate. They haven't been accurate lately. And I've noticed that myself. I'm sure other people have. Other apes have too. Yes, I realize that iBorrowDesk only shows a couple of brokers that is updated every 15 minutes, but that doesn't show cumulative count. But there is a big effing difference in the information we're being given by these two entities. IBD shows that a broker hasn't replenished any shares in 3 days, while Fintel is showing 6.4 million shorted shares in a single day. All right, let's see. So yes, I realize that okay, so I already read that. Where the hell are these shares being borrowed from, or are they just being created by market makers themselves? I'm leaning toward a bona fide market makers creating these shorts. Yeah, so I've seen things about stuff about this on Reddit, and the theory that's coming out now is that either BlackRock or Citadel is potentially creating synthetic shares to try to cover their losses, which would be pretty crazy. That'd be like some like earth-shattering financial news, and I believe it. I mean, I think they're losing so much money that they just are doing whatever it takes to cover, and because they don't have the shares to pay back. I mean, retail investors like us, like we literally own the float. So you know what I mean? I think it's all kind of starting to come together now. The fundamentals. Why does the market even care what we value? Ah, excuse me. Why does the market even care what we value GameStop at? Again, this isn't a rhetorical question. I'm legit curious as to why if anyone thinks if we think GameStop is worth $0 or $1 million per share. The entire premise of a free and fair market is that a buyer and seller set the price. Anything else is irrelevant. I agree with that. But is it relevant? At 200 per share, GameStop has a $14 billion market cap. That's less than 3 times revenue based on previous sales, and sales are about to boom. Every single dollar above the previous revenue that they earn on this upcoming report is just a higher valuation for the stock to naturally sit at. There is a reason why we haven't seen the price go too far under $200, and I definitely agree with that. All right. Sorry about that, guys. Just had to take a quick break. Had to use the restroom. Okay, so every single dollar over their previous revenue that they earn on this upcoming report is just a higher valuation for the stock to naturally sit at. There's a reason that we haven't seen the price go too far under $200, and that's because the company is worth $200 a share. I totally agree. Besides the fact that there could potentially be a big short squeeze, Ryan Cohen has taken over is probably going to take over GameStop, and he's building a crew there. I believe that they're going to turn into a great e-commerce company. Not squoze, not propped up by short hedges buying shares. It's worth $200 per share based on fundamentals alone. Agreed. Stocks tend to be forward-looking by 6 to 18 months. That is true. For anyone that didn't know that, the stock price traditionally has like a almost like looking into a crystal ball type of thing. Like it's based on the price going forward. I think this earnings report is going to paint a really bright picture for the 18-month future of GameStop. Okay, so let me see if there's anything else in here. So he just talks about how, he compares GameStop to Nikola, which is basically a scam, and they have, almost as much market cap as GameStop does. So he goes on to talk about the volume here. This is interesting too. Go check any of your favorite boomer stocks and look at the volume on Friday. I'll bet that most of them have a higher than normal volume showing on Friday due to witching day. So he goes here and he talks about Coke here, which is like almost triple on average. McDonald's, which is almost double. Johnson Johnson, almost double. Not sure what that is. Petco. Yeah, I mean, basically, GameStop is the only stock that has like super low volume. You know what I mean? Which is really weird. So he says, wait, what? Now, yes, I do realize that there are going to be some outlying companies that don't see an increase in trading volume on a quad witching day, but GameStop's volume trended negatively for that day, and not just negative, but almost cut in half of its 50-day and 200-day daily volume averages on a quad witching day when ETFs were rebalancing. So you're telling me that on one day that shorts were impossible to locate to borrow, that trading volume just happened to be half of its average on the highest trading volume day of the year? Alrighty then. And then he just goes on to talk about how options are potentially, killing GameStop. Basically, not like they're killing our movement, but far out of the money options don't do much for us, and we shouldn't be paying any attention to them. Or all it does is basically just give more ammo for the hedge funds to leverage themselves. I mean, that's all it is really. But yeah, I'm gonna leave it there, guys. Just want to put this quick video out there. Any support is appreciated. I am going to be doing a $50 cash giveaway at, I believe, 100 subscribers or 50. I'm not sure what I put. I'm sorry. And a $100 donation, $100 cash giveaway at 500 subscribers. Any commentary or anything, if anyone wants to leave anything in the comment section, I'm open to discussion. Any questions, just let me know. Again, this is not financial advice. And next time, I'll see you guys. Have a good one.